I want to say thank you to everyone joining us today from across the country and the world. I'm Alexander McCobin, CEO here at Conscious Capitalism, Inc., and just so appreciate you taking the time to learn and grow in community with us today. Today, we're joined by Conscious Capitalism board member Erica Karp and Ibrahim Al Husseini to explore impact investing, consciously aligning profit with social and environmental purpose. Now, before I introduce them, I want to make sure that everyone here is aware of conscious capitalism because many of you know that conscious capitalism is a philosophy that emphasizes the human nature of capitalism business. And it's a movement of business leaders around the world working to change and improve both the practice and perception of capitalism to elevate humanity. And here at Conscious Capitalism, Inc., we're a nonprofit organization dedicated to catalyzing that movement. Every week, we're offering virtual gatherings as a way for the community to see how this philosophy takes shape in the leadership journeys and business practices of those in our network. And today's gathering is going to run for about 45 minutes. Erica and Ibrahim will be in conversation for the first 30, and then we're going to transition to questions from you for the last 15 minutes. So if at any point you have a question or something you would like them to weigh in on, please type your questions into the Q&A box at the bottom of your screen. And if you have any technical questions or issues, please email us at info@consciouscapitalism.org. And now it's my pleasure to introduce today's speakers. Erica Karp recently joined Pathstone as their Chief Impact Officer after Cornerstone Capital Group, the company she founded, was acquired by them. Erica originally founded Cornerstone Capital Group to bring the disciplines of finance and economics together in pursuit of a more regenerative and inclusive form of capitalism. And prior to Cornerstone, Erica was managing director and head of global sector research at UBS Investment Bank. She chaired the Global Investment Review Committee, served on the UBS Securities Research Executive Committee, and served on the Environmental and Human Rights Committee of the UBS Group Executive Board. Her work has been featured by media including Bloomberg, The Guardian, Financial Times, Investor Relations Magazine, and Forbes. And Erica speaks on sustainable investing and finance at ventures around the world, including the UN Global Compact, the UN Principles for Responsible Investment, the Clinton Global Initiative, the Wharton School, New York Stock Exchange, and so many more. Ibrahim Al Husseini as well then is the founder and managing member of his family office, Husseini Group LLC, which he dedicates to facilitating, financing, and guiding ventures that embrace social enhancement and ecological sustainability. Ibrahim is a renowned investor, sustainability-focused entrepreneur, and philanthropist with more than 27 years of experience in operations, technology, and finance. He's dedicated much of his career to leading syndicates of value-aligned investors into clean technology and natural resource-related investments, while producing significant returns for all shareholders. As the founder and growth equity fund Full Cycle Climate Partners, Ibrahim is focused on reversing the effects of climate change by accelerating the deployment of climate-critical technology worldwide. Erica and Ibrahim, thank you so much for joining us today and sharing your wisdom. We are so excited to have you with us.
Delighted to be here.
Erica, hi, friend.
Hey, it's good to see you.
It's so good to see you, coast to coast, coming to you live from both coasts. So I wanted to start off today. First of all, it's really nice being with you, Erica. We've been on a wonderful journey together that I'd like to share a little bit with the audience before we start. And first, thank the Conscious Capitalism community for inviting us to share, just highlight a hero in this space. Erica's been in this space before it was trendy, before it was obvious, before people were falling over themselves to find ways to invest in it and be attached to it. And I just want to acknowledge you for not just your foresight, but also your care and your wisdom and your confidence and courage to know that, hey, we are a very ingenious, capable species, And yes, capitalism has raised billions of people out of poverty and allowed us to live this super abundant lifestyle that we do. And it can do so much more and allow us to live, in harmony with nature, and allow us to build a world of, abundance, financial, social, environmental, and do it, and basically have it all. And that is something that you've exemplified and you've been speaking to and creating in the world for a long time. That is why we were talking earlier, and one of the moderators said, hey, how did you two meet? And how we met was, I run full cycle energy funds, but I also run my family office, the Husseini Group, that's been investing in social environmental enterprises for a long time. And I had a let's call it like an introducer, somebody who brings me deals from time to time. And he sat across from me at lunch one day when we used to sit across from each other at lunch and said, hey, here's the deals I think you should invest in. And I actually said, I interrupted him and said, listen, I heard about this firm, Cornerstone Capital, and that's being, started by Erica Karp. And this woman is a legend and a giant in finance and way ahead of her time. Is there any way you can reach out to them and see if they will allow me to be an investor in their current round? And that's how our relationship started. Erica was gracious enough to let me become an investor and join her board. And we've had this, fantastic journey together of helping shape the world of finance into what is quickly becoming a lot more conscious, open, thoughtful, holistic way of shaping the future. So anyway, this is a long intro to say, Erica, it's good to be with you. And I'm glad we're having this conversation.
Me too. And by the way, for those of you joining us, know that Ibrahim is a font of wisdom. And there's a saying from a Jewish scholar, a rabbi, and Heschel. And he said that it is wonder rather than doubt that is the starting point for wisdom. And whenever I get to be with you, Ibrahim, I am, in wonder of what we can do and knowing we can do it in terms of transforming capitalism. So thank you for being an inspiration to me and so many other people.
You're welcome, and same to you, dear friend. So you joined the board of Conscious Capitalism, and lucky them for having you. And I look forward to seeing the organization transform now that you're part of it. And given the title, I'm compelled to ask you my first question, which is, all around, A, is capitalism broken? What is conscious capitalism? And is money good, bad, neutral? Give us some wisdom.
Okay. So these are the big questions. So the first one's easy. Is capitalism broken? Yes, it is, period. And, it's broken, but it's not irrevocably broken. And I think what happened is, years ago or centuries ago, you had Adam Smith, who is one of the fathers of, economics and capitalism, talked about the invisible hand, and market forces. And all that is good, and it's understandable, and it was, propagated to such a degree that we built this capitalist system. But there was a huge problem in that Adam Smith, he was a good guy. His first books were about the theory of moral sentiments. It is about humans having interest in each other. But in the work that he was doing at that time, he was not thinking about externalities. He was not thinking how businesses could be using resources beyond financial resources, but human resources and natural resources, where there would be unintended consequences. So these are negative externalities. And so from the point of founding economics and capitalism, we missed something really big, something structural. And that is hard to fix instantly. And so as we move forward into more modern times, people talk about Milton Friedman and the fact that you have shareholder primacy, and the company is built to maximize shareholder profits. And again, he missed some really critical things. And the first one is the term long term. Because in the short term, if you're going to maximize corporate profits, there's a lot of things that you might not otherwise do. Things that, again, create negative externalities. And by the way, Friedman was not, he was not a monster, right? But those terms, those words, long term, are critical. And so now we have a situation where capitalism is not regenerative, it's not inclusive, and we've gotten a situation where we have a massive level of income and wealth inequality, structural inequalities, and we've got to fix it. To fix it, we have to be conscious of it, and then we have to take specific measures, both private sector and public sector, but we can. So the two big things that are missing, I think, are collaboration, public and private, and understanding, what has to be done, and long-termism, and then also transparency. That's a big one. So it's a serious answer, but if we go back to the wisdom of the ages, right? Einstein said that the same level of consciousness of when a problem was created is not enough to solve the problem. We need a higher level of consciousness. And that's why we're all here. So Raheem, I'm sorry, that was a long answer.
No, that was a perfect answer, and it wasn't long at all.
Okay.
Yeah.
And so going to the other part of the question, money. All right, so people very often have difficulty talking about money, their own wealth, the wealth of nations, as it were, in particular family wealth. And so I think with money, we also have to have, an understanding, a way to talk about it. And so what I would say is, to answer your question, money is not good or bad. Okay, money is a tool. It's a mechanism for transactions, for trades. It is a store of value. But money is a tool, and it can be used for good, and it can be used for terrible evil. And by the way, the follow-up question that sometimes I get on this is especially about that good and evil thing, generally speaking. And I will tell you that in sustainable and impact investing, I kind of have definitions that we use at Pathstone that help us frame discussions. So as it comes to the question of money and good and evil, I would argue that you can take principles and apply money and then take a decision. The principle that I use is about the idea of freedom. And so I think about FDR and his 4 freedoms speeches. And he talked about freedom of worship, freedom of speech, freedom from fear, and freedom from want. So if you take those 4 freedoms and apply the use of money to them, in the case where we are detracting, where we are trampling even on those freedoms, money is bad. In the case where we are expanding on those freedoms, then money is good. And so again, that's the framework that I use, and that's what I drive with. So
I wonder what we can add to that, like something to do with our ability to live in harmony with the natural world, because I don't think at the time, whether FDR or Friedman or anybody actually thought of the world as having finite resources. We may have infinite imagination as a species, but we live in a world with finite resources. And how do we get to a point where it all kind of reconciles, the math around that reconciles? So we should think about, see if we can come up with another freedom that, allows us to, to also not trample on, the natural world, because it's it provides us so much. I mean, even putting aside the 34 trillion or whatever it is per year of free ecosystem services that nature, provides for us, it's just, we can't survive without it anyway. So there is no economy without a natural living biosphere. Anyway, if you think of something during our call, tell me, and if you don't, then text me later, because I'd like to think about another fifth freedom that revolves around that piece. So, Erica, you were so visionary in your career to have started down this path before anybody else does. What, can you tell us about the genesis of that? Because there's a lot of people who are entrepreneurs, who are visionaries, listening in or will watch this later. So many people are thinking, hey, I want to do something with my talent, ability, network, and I'm going to do this entrepreneurial endeavor. And sometimes we just jump on the first great idea that is in front of us, and decades later, we're still in it because it takes a long time to build enterprises. So maybe you can share your example, because you could have done anything, but you chose to build a conscious asset manager, right? A thoughtful asset manager that brings capital to where it needs to go without compromised returns, and be ahead of the curve on that, and how everybody now is trying to follow suit and falling over themselves to try to catch up to what you've done. What inspired you, and how can we share a message to people who are listening and thinking of starting a venture, how they can use their talents and abilities to do something to solve a real problem, instead of do something that they find out decades later actually created 10 other problems that now we have to solve?
Yeah. Well, I mean, the starting point, I guess, for any decision is it revolves around risk, right? Am I as certain as I can possibly be that I've got this right? And when it comes to the this, what is the this? Am I as certain as I can be that there is a solution to big problems that I can do my part to help with, right? And so what I came to sustainable and impact investing very organically, right? Mainstream Wall Street, director of research, looking to push analysts to make good investment recommendations on stocks and sectors and economies. It's all about questions. It's all about investing. And then as I began to learn about what was at that time called socially responsible investing, SRI, I saw that this was considered ideological and political and divisive at that time, right? So are you a tree hugger? Are you an ideologue? Are you just a religious fanatic? It wasn't considered investing. And the reality is, it is just investing. Environmental, social, and governance factors, ESG factors, that relate to the economic and profit outcomes of a company, that's just good investing, to systematically look at those. And so I learned that, pragmatic and enhanced analytical processes is just another lens. And in fact, it's the lens that is going to be applied in all future investing. Now, saying that, 15, 20 years ago, I actually had to be subversive, because I did not want to be, pushed out there saying, she just focused on her values. So I was very subversive. I did not use the language of sustainability or impact or environmentalism or social justice. Did not use that language. I used the language of finance and investing. And again, the more I learned, the more I was absolutely certain that this discipline was where it's at, and it is where it's going to be forever. And then the fact that I was able to see my own values align with my business, that brings purpose to your job, and to have a career that is powered, by purpose and by learning and by questioning and by sometimes coaching, sometimes advising, but to really do what you're meant to be doing in business and finance, that just keeps the energy at the highest level. I mean, this work that we do, aside from driving both profit and purpose, it is endlessly fascinating to see the interrelationships between the world's environmental, social, and governance issues. So I'm having a blast still after all these years.
So great. It must be so satisfying to have seen something so early and then have the market actually catch up to you. Not that the market can ever actually catch up to you, but catch up to where you were decades ago. Does that feel a little satisfying, or does it feel frustrating that it's taken so long and it's so slow and there's so much greenwashing and so much, me too, like not me too, what is it called? Like just like copycat,
I know.
Yeah.
In some sense, it's enormously satisfying.
Good.
Because if we're making progress towards the purpose, again, the purpose is to create a more regenerative and inclusive form of capitalism. That's the purpose. So if when everyone comes along, very satisfying because we're getting towards the purpose. Now, being kind of a human being, and everybody has their ego, part of me is like, well, where were you? Like in the first place? It's almost like I came out as gay on a Wall Street trading floor 25 years ago, and nobody did that, right? so you just didn't. And then like now, the past few years, like everybody's coming out because they're gay, and they're like, whoa. I'm like, where were you 25 years ago? It's a little bit like that. But net, it's good. There are unique challenges to kind of the onslaught of investment strategies now, because it's cool and it's popular, and there is a lot of, there's a lot of marketing. There's a lot of product that has been just relabeled. There's a lot of kind of what I consider kind of sustainable investing 1.0, meaning kind of just screening out, which is, again, it's fine. It's all progress. I'm happy for the progress. I have some worries though.
All right. Well, I'm gonna put that in a little bit into context for those of you who do have your assets managed by third parties. So, what Erica's talking about is in this, let's say investing or conscious investing or asset management 1.0 is where we're just negatively screening, fossil fuel companies, firearm companies, private prisons, things like that. Then there's the other spectrum, end of the spectrum, which I love this quote from James Gifford from Credit Suisse. He says, decarbonizing your portfolio isn't the same as building a portfolio that decarbonizes the world. And that is that's just one piece of the ESG, which is the environment. And we have, social and governance. And you're such, obviously this is a domain that you have mastery in, pure mastery. Why don't you, like, I'm a person of wealth, why should I move my money to your firm or a firm like yours? Okay. Like, why am I going to leave money on the table? Is the service going to be the same? Am I going to sleep better at night? What am I leaving on the table here? What am I sacrificing?
My favorite question. You are sacrificing nothing by aligning your money and your values. You can get market rate returns in any asset class and do it in such a way that it is conscious and intentional and sustainable. This is one of the issues that we still have to make sure we drive the empirical evidence to show this. But for instance, Pathstone, we have a piece called Sacrifice Nothing. It's a meta study, hundreds and hundreds of studies to show that you can get equivalent returns by integrating ESG. Not only that, but there's evidence that you get better returns. And by the way, if you look at the markets over the last year, when we had the big downdraft in Q4 last year, you saw sustainable funds outperform dramatically. Now, some people expect that in a downdraft because there is a risk management thoughtfulness. But what was really cool is in the recovery, we saw outperformance too. And that is what surprised a lot of people. So even more empirical evidence that you will be a better investor, and we can find better asset managers that understand this. And by the way, the risk management part of sustainability, that's kind of more obvious. So the risk, the opportunity part, and here's what I attribute the outperformance to. The opportunity part is with sustainable investment, right? We are thinking long-term. We are thinking about innovation and resilience and quality around the biggest themes and necessities in the world. So around, energy transformation, healthcare, and remote learning, and education, all of these huge imperatives. These are big dynamic trends that need innovation. So if you're investing sustainably, you are getting the proxy for all the innovative trends that we need to have, right? And arguably in the E and the S and the G, there's nothing that's not included in there when it comes to analyzing a stock or a sector. There is nuance though, all right? And so looking at the intersection of the Sustainable Development Goals, that's what this is that the UN created. There's a lot of nuance, and so managers have to be good at it. But I cannot imagine why a conscious investor would not have their money managed and advised on by those who are familiar with sustainable investing. And so firms like mine are all about the customer service, investment results, really strong reporting of investment results, and a deep understanding of the themes that go into long-term success. And again, happily, we sacrifice nothing for our clients.
Beautiful. And it sounds like even if somebody doesn't have, even if somebody isn't a conscious individual, the performance is exceeding traditional portfolios. So what's the problem? The cherry on top is the world is a little better and you're making more money. It sounds silly. Is what's the resistance? Can I tell you one that annoys me? You can tell me, is sometimes people keep their money with certain people because or certain firms, mostly because of their relationship. They're like, we've known this guy or this, they have all their kids' birthdays in their Rolodex, send gifts. Like it's this big relationship game as opposed to the net. What is the money doing? Is it generating better returns? Is it making the world a better place? Are they getting better customer service? Was it just feeling guilty because somebody that, who's managed their money for so long keeps them happy and feeling good, by attending their bat mitzvahs or whatever it may be? We need to be a little bit more responsible and a little bit more courageous than that, especially since we're people of wealth, like we're shaping the future. We live in the present because of the investment decisions we made 50 and 30 and 20 years ago. Like, where do we want to be in 50 years from now determines what our money's being invested in today, right?
Yeah. Well, so there's one thing I should say.
Okay.
When it comes to relationships, I don't for a second underestimate how important that is. When it comes to investing, there's two things that you want to see that are not and will never become pure commodities. And one is relationships that will never become a commodity. But the second is ideas. So relationships and ideas are the two things that we have to go after. And there is no reason we can't have both. So if when we find prospective clients that have great relationships, we would never try to take those away. But we have amazing ideas. So we can partner together with an existing advisor, become another advisor. But ideas, that is the genesis of the energy that is going to be required to move trillions of dollars towards impact. And so, again, those are the two things: relationships and ideas. Yeah.
So you know how, you know about my firm Full Cycle. So you know how important, prioritized strategic asset allocations are for really the inhabitability of the only home that we know. So what happens to the world? This is something that, as the human being who lives on this closed sphere in the middle of space with the rest of us, what happens if we continue to ignore the, like social injustice, environmental crisis, the climate crisis, wealth disparity? Like, what happens if we just stay apathetic and shrug our shoulders and not confront our responsibility as people of wealth, and just, I don't know, hope somebody else handles it? What happens?
I guess in technical terms, what happens is that we are all completely screwed. All right. The reality is, this is an existential period for us. All right. COVID-19 and the next pandemics that are coming, they're not independent of anything else. They're not independent of climate, right? The destruction of thousands of species every year and the destruction of their habitat and putting animals, very close to humans, where 60% of biological disease comes from animals, right? This is not independent. The fact that we are having challenges with water and water scarcity, that's a global security issue. This is where wars come from, right? The fact that we are having nightmares of, social injustice, again, when it comes to resource availability and income and wealth inequality, these are not independent. And so we are having 1 in 200-year weather events every year, at least, right? So there really is not the choice but to do something. And the simplest thing that every single individual can do is make your investments more sustainable, right? This is not hard to do. It's hard to do really well, and it's hard to do in big scale, but we can do it. We absolutely can. So we really don't have a choice, but not to take action. And Ibrahim, if I may ask you a question, with Full Cycle, I mean, you get it that we need to go beyond sustainability, right? Sustainable, staying how we are, is not good enough. We can't just stop the damage to the planet. There's a lot already baked in, but we have to be able to actually repair the damage and then move forward. So with you and your vision, one, do we have the technology to really do this kind of repair? And two, is the capital available in the world to do the kind of repair?
Well, I'll answer your question in this way, just, so you can also, for the audience edification, they can also understand how nuanced Pathstone is, because Full Cycle is on the Pathstone platform as a growth equity investment opportunity. So it's, it goes to the credit of, you and your team and Pathstone to understand that haphazard good is behind us. This idea that, hey, we're just gonna, like, everything that sounds good, we should throw money at, that assumes that we have all the time in the world. And of course we don't. We have to prioritize every single dollar. So, and where it goes. down to the molecule. Like most people don't understand. It's like, for example, full cycle actually addresses the greenhouse gas molecules that are hundreds, if not thousands of times more heat trapping than CO2. And sometimes we don't even think about that because most, again, they don't go into that level of nuance. For us, it's, again, we look at it from an existential standpoint. What is the carbon return on investment that is the most front-loaded possible that we can generate? And that's what full cycle does. We invest in the market-ready technologies that have the highest CROI in the industry and then accelerate their global rollout so we can quickly, as fast as possible, transition from a high carbon, unsustainable economy into a low carbon, sustainable economy that lives in harmony with the natural world. And we do it in a risk adjusted basis such that we're creating asymmetrical risk returns for investors where they're getting, basically infrastructure exposure, but with growth equity type returns. So the answer is yes, we can do it. We need to move more capital faster. But the reason why something so thoughtful and nuanced is being brought up today is because your firm looks for these diamonds, these needles in the haystacks, and directs capital there because you understand that time is much more important than tech. That now is better than new when it comes to climate. How can we roll out what works? If your house if the fire's in your backyard, you don't go invent firefighting technology, you accelerate the deployment of buckets and hoses. So that's to your credit and to your firm's credit for having such a product on your platform. And I mean, you and I can talk all day about this stuff because we're super passionate about it, and we've been doing it before it was trendy and cool, and even all the nomenclature that was invented to describe it wasn't even available back then. So anyway, I know we have to take, it's time to take questions from the audience, and this is where we hand this over to Alexander to take it from here, and we'll just listen in and participate where we can.
Ibrahim and Erica, thank you so much. This is such a rich conversation, and we've got a lot of questions coming in. So I'm going to go through these quickly to see just how many we're able to get to, knowing that we only have 7 minutes left. So first one from an anonymous participant is whether CSR and ESG metrics are enough to assess the consciousness of a management firm, or if other things should be included as well.
No. That's the quickest thing. It's not enough, right? So when it comes to corporate social responsibility and the disclosure of environmental, social, and governance factors, we have still a very long way to go. They are a starting point for inquiry, all right? We don't yet have standards for the disclosure of material ESG factors by companies, but we're getting there. So thanks to an organization called the SASB and the GRI, we're getting there. But it's not enough, all right? So that's a longer discussion in terms of the data quality that we can have. When it comes to CSR, it really has to be looked at by organization to understand the commitment around their programs and around everything from incentivization of those programs to an auditing of them. So no, not enough.
Great. Then Anthony is wondering whether conscious capital needs to be shared as a message with the average person beyond just business leaders and traditional managers.
Absolutely. Brahim, you were not aware, this is new for you to get to know the organization, but makes sense, right? Yeah.
Great. So, Erica, Deborah Smith is wondering whether you see DEI, diversity, equity, and inclusion, as intersecting with conscious investing as a hot trend or something that's here to stay.
Oh my God, it is absolutely here to stay. The ESG and sustainability and DEI are inextricably linked. All right, because we want to engage all of humanity, all right, to be at the table and be in a place to make decisions and make up policies and build equity financially and in all other aspects. DEI is, again, we get more acronyms all the time. We must have equity and social justice. And by the way, let me throw in, as long as we've mentioned a few of the great thinkers, right? I think it was Benjamin Franklin who said that we won't have justice until those of us who are unaffected are as outraged as those of us who are, right? So take some time to think about that and think about how you feel about, Black Lives Matter, and how you feel about sexual and gender-based violence, or how you feel about human trafficking. I mean, justice has so not been served yet. We should all be outraged.
Thank you. And Ibrahim, were you going to say something?
No, just nodding in agreement.
Thank you. And this question is for both of you. Brian Gates is wondering, in the public markets, what mechanisms are or could be effective in curbing the tendency for executives to boost short-term returns at all costs, as driven by an emphasis on shareholder demands?
This is a huge governance issue, all right? This has to be discussed in every boardroom of every company, in every industry in all of the world. The compensation structures matter so much. It drives so much of the activity that goes on in the business sector. And so what we do look for, in a governance standpoint, is we do look for those incentive structures that should matter, right? It should matter that a semiconductor company is using so much water, but the executives are not incented to be thoughtful on water scarcity. It should matter that the executives of a mining company cause incredible social unrest and, like basically wars or battles at new mines. It should matter. It better be recognized in compensation. And when it comes to DEI, it should matter that diversity is embraced and optimized, and that should be in the compensation at the highest levels. So that's here to stay. That's real.
Nivrim, what about you?
I mean, I want to give the last 2 minutes to Erica to, I know she has to drop it at quarter to the hour. And, I just want to make sure that she has a couple of minutes to say some final words, because this has been such a rich conversation and so helpful. And I'm so glad we had such a high attendance. Erica, you want to take it from here?
The only thing I would say is what a privilege it is, Brahim, to be able to know you and to begin to know everyone in this movement. It is a movement. And I will tell you that over the years that I've been involved with sustainable and impact investing, it's not about kind of a business transaction with people. It's not about an investment proposition. It's about an experience. And I have had so much more kind of rich experiences in the last, decade than I have in decades before that. So it really is, it's a privilege to be here. And I think about the idea of legacy, having been on Wall Street for so long and then having founded my own firm and now starting, the new journey with Pathstone. It's about what's the legacy. And Shakespeare wrote that there is no legacy so rich as honesty. And so I see that as just a huge part of my path forward. Transparency and honesty. I love what we don't know, and I want to learn about it. And then I want to deploy what we do know. So, so Alex and everybody, thank you, for having me.
Erica, thank you for joining the board of Conscious Capitalism, for giving us your time today. Ibrahim, thank you so much for joining us as well, getting introduced to and involved with the community. This was such a valuable conversation. I hope everyone who's listening took away as many notes as I did from this. And we'll give you time to go to your next call and just say thank you again to the two of you, Eric and Ibrahim, for speaking today, and to everyone who is joining us from around the world. We'll see you next week's virtual gathering to keep this conversation going. Until then, take care.
Bye, everyone.